Some people earn modest incomes yet rarely panic about money, while others earn far more and still live in a constant financial emergency. Every month a large paycheck arrives, yet peace of mind remains surprisingly difficult to find. Many people assume stability comes from earning more, but the real problem often begins somewhere else entirely. What makes life feel fragile may not be a lack of income, but something more fundamental beneath the surface. If income alone created security, rising salaries would reduce anxiety, yet financial stress continues to spread. The difference between financially stable people and everyone else may have less to do with paychecks than we think. Welcome to The Margin, where money, psychology, and the pressures of modern life meet in the same conversation. Today we explore why the most financially stable people often organize their lives differently, and some of those differences may surprise you. Many people chase higher salaries believing they automatically create security, yet income and stability often move on different paths. As earnings rise, lifestyle expectations quietly expand as well, leaving less financial breathing room than before. This pattern is called lifestyle inflation, where every increase in income seems to find a new place to be spent. Spending is not the real issue. The problem begins when every dollar is required to maintain the current lifestyle. Financially stable people understand that lasting stability depends on creating space rather than maximizing consumption. That extra space provides room for mistakes and prevents small setbacks from becoming major financial drawdowns. It also creates room for unexpected events, giving people time to respond instead of reacting in panic. Most people build their lives at the edge of their financial capacity, while stable people choose to stay comfortably below it. The difference seems minor during good times, but volatility reveals the gap when conditions suddenly change. True financial stability is built long before a crisis arrives, through small decisions repeated over a long time horizon. The most financially stable people rarely optimize every dollar because they intentionally leave room for uncertainty. They avoid using every available limit because flexibility often matters more than maximum spending power. Instead of stretching to the largest home they can afford, they choose options that can survive a future drawdown. In finance and in life, a margin of safety reduces the damage when reality refuses to follow the plan. Stable people build reserves not because they expect disaster, but because they understand risk. They know volatility is normal, so they prepare for change instead of assuming perfect conditions. Their question is not how much they can buy today, but how much remains safe over the long term. Small changes in financial questions often lead to dramatically different outcomes over time. Modern culture celebrates maximizing everything, while stable people focus on what they can sustain. Rather than chasing their upper limit, they protect the foundation that keeps life stable through uncertainty. The most financially stable people often spend less on possessions and more on preserving future choices. Savings can quietly create the option to leave a damaging job or step back when life becomes overwhelming. These options rarely look impressive online, but they can dramatically reduce risk in real life. One office worker chose to stay in a modest apartment even after earning significantly more income. Years later, that decision provided a financial cushion during a layoff and reduced the potential drawdown. Many people purchase symbols of success, while financially stable people often purchase flexibility instead. They understand that uncertainty and volatility are permanent features of the future, not temporary exceptions. Before spending, they often ask whether a purchase expands freedom or quietly limits it. The question sounds simple, yet over a long time horizon it shapes countless financial outcomes. Financial stability often comes from flexibility and resilience rather than visible luxury. Many people spend years chasing assets, but financially stable people pay equal attention to the cash flowing through their lives each month. They understand that fixed monthly bills often create more stress than market volatility ever does. Every new obligation reduces flexibility, and enough obligations can quietly turn income into pressure. In 2020, millions lost their jobs unexpectedly, revealing how fragile many financial situations really were. Some households endured for months, while others struggled within weeks, despite similar incomes before the drawdown began. The difference was often not income level, but the strength and durability of monthly cash flow. Financially stable people avoid commitments that consume too much of their future income and time horizon. They do not necessarily spend less because they must. They spend less because peace has value. Money that does not already belong to a lender, subscription, or obligation creates meaningful freedom. Sometimes the smartest financial decision is not earning more but removing unnecessary pressure from everyday life. Much of today's financial stress comes from comparing our lives to other people's highlight reels, and social media delivers that pressure every single day. We see other people's achievements on display, but almost never see the trade-offs, sacrifices, and risks that came with them. A new car looks exciting in a photo, but the 5-year payment schedule rarely makes it into the picture. A large house often looks like a symbol of success, while the long-term financial burden stays quietly out of sight. Financially stable people recognize this illusion and refuse to measure financial health by appearances alone. They focus more on their personal balance sheet than public approval, and that changes many everyday decisions. When social pressure loses its influence, emotional spending often declines and long-term stability has room to grow. Instead of trying to win a status competition, they focus on building a life designed to last through volatility and change. That may be why financially stable people often appear surprisingly ordinary, because impressing strangers is not their objective. They choose peace of mind over recognition, and for many people that trade-off proves valuable over a long time horizon. Financially stable people view risk differently because they understand that life rarely follows a completely predictable path. Instead of waiting for problems to appear, they prepare quietly while conditions are still comfortable and manageable. An emergency fund is more than unused cash because it provides protection against unexpected financial setbacks. Long-term investing is not only about growth, but also about building security through compounding over time. Insurance may not seem exciting, but its importance becomes clear when unexpected crises suddenly occur. Financial resilience is usually developed gradually through small habits and systems repeated over many years. Although the process appears boring from the outside, it creates a meaningful sense of stability. The real goal is not extreme wealth, but maintaining stability through life's changing circumstances and uncertainties. They focus less on immediate results and more on outcomes that can endure over time. Financial resilience may not create dramatic stories, but it often leads to a calmer life. When you zoom out, the most financially stable people seem to follow a different set of priorities than everyone else. They leave financial margin on purpose because breathing room often matters more than one extra symbol of status. They buy flexibility because having options can become more valuable than owning more things over a long time horizon. They protect cash flow because lower monthly pressure often creates a calmer and more resilient life. They ignore most status pressure because public validation does not reduce debt, risk, or monthly expenses. They optimize resilience because volatility and unexpected setbacks are normal parts of modern life. Together, these ideas form a stability-first framework, a simple system that helps decisions stay aligned with reality. This framework does not promise instant wealth, but it can support a stronger foundation for long-term progress. For many people, real success is not getting rich overnight, but reducing financial anxiety year after year. The ultimate goal is simple: waking up each morning feeling secure instead of financially overwhelmed. The most financially stable people may not have the most impressive lifestyles, but they often enjoy the most peace over the long term. They are not protected from problems. They simply build enough margin to respond when volatility arrives. In a world of rising costs and uncertainty, resilience can become more valuable than status symbols. The biggest lesson is that financial stability rarely happens by accident. It usually follows deliberate choices over time. Stability is often built through small decisions repeated consistently, even when nobody else notices them. If these ideas resonate with you, The Margin explores more stories about money, psychology, and modern life. Sometimes the goal is not becoming richer as fast as possible, but creating a life that feels calmer and more sustainable. What do you think contributes more to financial stability, higher income, or a simpler lifestyle? Share your perspective below.